As long as you can make it work with that 40% expense ratio, you can usually, get or buy a profitable property.
Welcome back to the CashFlow podcast, the podcast where we talk about turning properties into profits. I'm your host, Jayson Yoss, and today I'm here with my special guest, Braydon Moreno. Braydon, how you doing?
I'm doing good, thanks. Thanks for having me. I'm excited.
I'm excited too to have you on. Before we dive into it, I want to give a special thanks to our sponsors. Daniel's Plumbing, covering Orange County, San Diego, LA, and the Inland Empire. And Rainforest Plumbing, Heating, and Air, covering Phoenix and all of Maricopa County. We couldn't put this on without their support. Now, Braydon, I'm super excited to have you here. Founder and partner at Two Most Days. It's a residential, short-term property management firm. How'd you get into it, man?
Yeah, I got into it. I actually never thought I would actually be in this space, but I started investing in some real estate back in 2016, 2017 time. Then I got into some short-term rental stuff myself. My business partner, same thing. We both went to San Diego State University, and then we kind of met up at a networking event, started talking about short-term rentals, and realized there was an opportunity to kind of deliver an exceptional experience for owners and actually manage properties. And so we teamed up together. Luckily, she's like the yin to my yang. She's the operations. I do more like the growth and sales. And yeah, we started the company.
I love that. I have a yin to my yang over at GoldenWest, and it's the same thing. Like, I couldn't be as successful, we as a company, if you don't have that two different personalities.
Yeah, definitely.
But, you guys could have done a lot of things with the experience that you have. Did you ever think that you were going to take your own short-term rentals and grow it out into a big company?
Yeah, we talked. So we started out doing arbitrage, which was basically like leasing from owners and then renting them out on Airbnb.
Okay.
And then realized that model is extremely difficult when you're dealing with different types of owners, different types of properties. Sure. You have repairs, things like that. You have to kind of figure out who's responsible for what. And then we kind of moved away from arbitrage and started going into what's called co-hosting, which is really just managing short-term rentals for owners.
What is the big difference between being the full-time manager and co-hosting? Like, what is the key difference?
There's not really a key difference in terms of, it's just co-hosting is more for short-term rentals, whereas like property management, typically they refer to that as long-term rentals.
Got it.
Yeah.
Got it.
So,
and then specifically, like, how have you been growing your portfolio? Is it just by word of mouth, do you marketing, or like, are people going like, hey, I need some help doing this?
Just try to be as charming as possible. No, I'm just kidding. No, I go to a lot of networking events. I talk to people. Owners have referred new clients to us. So that's always like, I know we're doing a great job if the owner refers us a client because, we've been working for them for a while. Or owners have acquired new properties, so we've grown that way too. So kind of grow with owners, grow through referrals. And, when we first started, we did a lot of cold calling. Right. We're now in the process of acquiring another business, so we're actually growing by acquisition. So yeah, just trying all different avenues.
Did you have mentorship, tutelage? Like, how did you get to where you are now? You're an expert in the space.
Yeah.
What does that look like from a learning perspective?
Yeah, when we first started, we had no idea really what we were doing. We kind of understood short-term rentals, but as you start going into it and setting up processes and things like that, obviously it gets very complex. You're using a lot of different software. You're trying to manage processes and procedures. It's crazy. So we joined a short-term rental group.
Really?
Like a nationwide short-term rental group, and it was like, we were doing like 3 or 4 calls a week, just learning how to set this stuff up, how to set up the financial side, how to set up your procedures and processes with your like cleaners and all that. So yeah, and then it just kind of grew from there. So
when you set up this business, I'm assuming you guys had a service or real estate philosophy. How do you describe it to your clients, and how do you go about the management of properties? Like, what's that mindset look like?
Yeah, I think main thing for us is, and what we always tell to our owners is we started as owners.
Yeah.
So we're always going to have a different kind of mindset when we're dealing with someone's property. We're going to try and treat it as much like ours, even though it's not ours. And I think they respect that. Even with owners, we're working with them. Like, we put them in a direct chat with me and my partner. So if anything comes up that's like drastic that we need to talk to them about, they have direct communication with the owners.
Right.
And that's something we said, like, no matter how big we get, we want to have that relationship with owners, because I think that's going to help us just organically grow over the years that we're doing this.
There's not many companies where you get to be on a direct chat with the owner. That's for sure.
Yeah.
Is there, when we talk about vacation rental, I think of like so many different things, starting with, okay, the property's furnished.
Yeah.
But what are some rules of thumb when you're talking about clients about, hey, is vacation rental the right thing for you?
Yeah, this is a huge topic, especially in San Diego. I mean, San Diego has a really good short-term rental market. People are always asking me like, hey, I want to buy a short-term rental. I don't know where to start, what to do, things like that. I always like the easiest rule of thumb with short-term rentals. There's a couple of them, but the easiest rule of thumb is if the estimations of what that property will do are 15% of the purchase price, you're typically in a good ballpark with putting 20% down. So, and the math behind that is if you buy $1 million property, you put $200,000 down, your mortgage payment is about 7.5% of your actual overall purchase price. And so if you're making like 15% of that in revenue, $150K, you're going to net probably like 15 to 20,000 after all expenses, all that stuff. So it will make sense if your revenue generation is 15% of your purchase price.
Got it. And let's talk about that, because short-term rental has way different expenses and overhead than say a long-term rental. So like, how do you explain or break down the expense ratio or the overhead to a client? Because they just say like, oh, I'm booking my home for $200 a night. I'm going to rent it for like, 20 nights a month. Oh, there we go. I did the math. I made $4,000. Like, isn't it right? How do you break it down?
So everything starts at the estimation level, right? Like you're going to buy a property. What is it expected to generate? So we use like 3 different estimators on there. From there, we take whatever those estimations are and we take away like 40% off of it. That basically will be roughly around where your net income will come in.
Got it.
That includes property management fee, cleaning fees, expenses, supplies, all that stuff. 40% off the top. If you want to be ultra conservative, you could say 50%.
Okay.
But 40% is typically where it falls in there. So as long as you can make it work with that 40% expense ratio, you can usually, get or buy a profitable property.
Now, I know you got to hear this a lot. And again, on the long-term rental side of the house, I don't hear this as much, but I'm sure clients come to you and say, hey, Braydon, I want to vacation rental my property. I'm just going to go to Europe for a couple months. Or, hey, like I'm going to live in my Phoenix property, but I want to be here for like all the summer. Like, how do you deal with people who essentially live in their property, but also want a vacation rental it?
Yeah. So I think, 2 things I want to address. One is a lot of people come to me that just have a long-term rental and they want to turn it into a short-term rental.
Okay.
And I always tell them, don't do that unless the projections are estimated to be like double what the long-term rental rates are.
Okay.
It's not even worth it if it's going to be 20, 30, 40% more, because then you have to furnish your whole house. You have to like take the risk of seasonality and variability, all that stuff. So that's first. When owners want to just rent it out on a part-time basis, super duper easy for us to do that. We don't typically like to do that because we want a year-round rental. It's not beneficial for us as property managers for it. But the way our system works is owners can go in there and block out dates. So if they're like, hey, I want to come for 3 months, they just literally go in there, click the date, drag it till the end date, say owner block, I'm coming in, and then it just blocks off the calendar on all the booking sites that we manage. So
that makes sense.
It makes it really simple.
Super user-friendly there. When you talk about, short-term rental, okay. And again, I started from the beginning saying, okay, there's furniture in there. It's furnished. Is there a certain time frame minimum? Like that could be 1 night, 2 nights, 3 nights. And then is there a maximum as well? Like, hey, we're not going to accept bookings over 2 weeks or 2 months, or how do you go about that process?
We'll never do 1 night. If anyone's listening, do not do 1 nights ever. We had multiple times when we first started where we did 1 night bookings and like got homes destroyed. Luckily, it wasn't terrible, but 1 nights typically end up being parties.
Rule of thumb, no 1 night.
No 1 night. 2-night minimum. Sometimes 3-night minimum if it's like weekends or holidays, things like that. We typically don't. We're extremely flexible. I think that's another thing that owners like. So we don't like cap the length of time that they could stay. If someone comes to us and is like, hey, we want to stay for 60 days, as long as the numbers work, we can make it work. So, we've had owners where we started out as short-term rentals and then we moved them to like mid-term rentals. So like travel nurses, corporate housing, insurance relocating, because it wasn't working as well as a short-term rental. And a lot of that had to do with just the market. It was too competitive.
Do you ever worry, again, because you're focused in San Diego, do you ever worry about the landlord-tenant laws when you cross that 30-day gap? I mean, they're crazy here.
Yeah. I mean, I've owned real estate and had squatters and things like that. So I sort of like, I'm already prepped to be able to handle it when it does happen because I have like people in place to do that. So it doesn't worry me as much, but I would just say owning real estate in California worries me just in general.
Is a risky proposition. That is 100% truth, Braydon.
Yeah.
And let's talk about what we're seeing in the industry, because the industry is changing a lot. It's growing up. I mean, would you say the last 10 years, all of a sudden it's gone from like, wow, everybody's vacationing a room to like now we're a full-fledged industry. So laws and things like that are coming in.
Yeah.
What are we seeing when we look at things through the short-term lens?
Yeah, I mean, I think the number one question I get is about regulations, right? Everyone's like, I don't want to invest in short-term rental because of regulations. Okay. Luckily, like for San Diego specifically or San Diego proper, we actually have a legitimate regulation kind of program already built in.
Right.
So we have a certain amount of licenses that are acquired or go towards short-term rentals. And we still have like 17% of that supply, which is like 900 licenses available. So you can get a license in San Diego and you can keep that. You're grandfathered into the system if you get it. There is potentially future regulations that could happen, but you just have to be ready to pivot if you need to.
Sure.
Midterm rentals is another huge market as well that most people aren't doing a lot of. Sure. And you can get pretty good rental rates for that too.
That's true. There is a lot of, like you said, insurance, traveling nurses. Nurses is a big one down here because of the DOD with the Navy being down here. So when you talk about market change, what other aspects or techniques do you apply? Like I hear a lot about tax credits. What do you apply to help clients, hit numbers or get above their number?
First thing is like you really do have to, because we work with a lot of investors at the stage of wanting to buy a vacation rental.
Okay.
So we're like helping them locate vacation rentals in San Diego. You want to make sure you're buying a property that fits into the profile of the area you're buying it.
Perfect.
Like some people just want to go into North Park and they have a 2-bedroom house and they're like, I'm going to make tons of money as a short-term rental. I mean, 80% of the supply in North Park is 2-bedroom houses. Yeah. So it's going to be really difficult to get high occupancy in there. But if you go into North Park and get a 5-bedroom house, you're going to be like top of the list, right? No one else has 5-bedroom houses. Like 1% of North Park is 5-bedroom houses. So finding what works in each market is the best. So I always say in San Diego, look in areas that are close to major destinations, right? Like Balboa Park, the zoo, Gaslamp District, Coronado, whatever it may be, major places, the beach people go within 10 to 15 minutes and get as much house as you can possibly get.
Right.
As big square footage, as many bedrooms, because those ones are 2 to 3% of the short-term rentals in San Diego. So you'll like have a leg up immediately.
Perfect. Yeah. And is there a certain way you're showing them like this is what we can do to make your home stand out, or are you coaching them on design, on remodel, what aspect? Yeah.
Some owners are more acceptable with doing those type of things, but we always are suggesting kind of where can we take this property and make it stand out. And there's a lot of amenities that you can add that immediately will generate better returns for you. Right. I mean, adding things like a spa into a property generates 5 to 10% more income on that property. I mean, you could pay that back in 2-3 months potentially if your property is generating a certain amount of revenue. So you just look at the property, you look at like kind of the space, what type of things can we add to it? Is there a cool area where we can maybe turn into a game room? Can we add a spa into the backyard? Can we add a sauna? Maybe if there's not enough space for a spa, something like that, just to create like a little bit of an elevated experience.
Nice. And again, and when it comes to, do you guys do cost segregation analysis? Like what are the things that you're able to also value add for those clients of yours? Yeah,
that's like the new thing that we're getting into is just helping investor clients figure out how to buy short-term rentals and write off as much of that as possible. And it's kind of sounds very complicated, but it's really not that complicated. If you're like a high W-2 earner, or if you earn a lot of business income and you go buy a short-term rental, you either have to put in 500 hours, you have to put in 100 hours more than anyone else. And so we've kind of created these timesheets to help owners do this or investors do this. If you do that, you qualify for what's called material participation, which means you can then take your short-term rental, do what's called a cost segregation study, and write off a big portion of that property. 100% of it, bonus depreciation.
That's totally huge, being able to lower your tax base. Yeah. Now, again, we'll caveat in there that, consult your tax professional as, licensed property managers and realtors. Like we're going to stay in our lane, but our experience in helping our clients do that, that's a huge win for them, because it's one thing to make money on your property. Yeah. It's another thing to be able to, lower your adjusted gross income.
Yeah, and $1 million property. I mean, we're working with someone right now, cost segregation study. I mean, he's going to have almost $240,000 of write-off. That's awesome. Of write-offs in year one of buying that property from his earned income.
That's great.
Not his passive income, his earned income, which is wild. So I mean, it's just a huge hack. It's
Real estate investor.
Yeah, short-term rental loophole. If anyone wants to look it up. So
I love it. I love it. Let's segue that into some case studies of properties, clients, and situations you've had in order to create some success. So I know we talked a little bit about like ADU play. Like, how are you seeing that work out in the short-term space?
Yeah, our biggest success story is always, there's a lot of people out there that own like one short-term rental and they manage it themselves. And I'm sure they're doing a great job and all that, but every time we've taken over from a self-manager, we've increased their income way more than our management fee.
Right.
I think that's the biggest misconception is if I hire a property manager, I have to pay the management fee.
Right.
But if they're not making more than their management fee, they're not doing a good job on your property. Typically, if you're self-managing, you're not using certain tools, you're not putting it on multiple booking sites, things like that, just because it's very complicated to do that. So we can do those type of things and increase your income pretty easily. So those are like the best success stories.
The biggest thing that the misconception is from the self-manager is like, oh, well, I don't have to pay a management fee.
Yeah.
Your time, energy, and effort going into working on the property, if you made $50 an hour, okay, in your regular day job, and you spend 4 hours a month, and I'm sure you spend way more than that, that's $200 right there. So 100% what you're saying, you are paying through your time.
I mean, we have an owner, top year, did $75,000. He switched over to us. We closed the first year at $123,000, and we're going to close this year at $160,000.
Yeah,
in a down market in Airbnb.
Covers your management fee.
And he's going to make over $100K net, and he has a property manager. He was making 75 with him managing every aspect of it. So it's like, it does pay for itself. You just have to find a good property manager. There's some that neglect properties and things like that, but someone that cares about the properties, cares about the owners, things like that will do a good job.
A professional is the key phrase here. Like, find a professional.
Yeah.
This is what they do. We talk a lot about that, not just being a realtor who happens to manage rentals, but, a licensed professional whose sole focus is on making sure you can get those good returns.
100%.
What about, rehab projects? Like, what have you done with clients to help them through a rehab or renovation increase their bottom line?
Yeah, I think the easiest way to increase revenue on a property is just adding more beds. I know that sounds like pretty simple, but a lot of you go into these places, these houses, and owners are like, hey, we want to turn this into a short-term rental. And I look at these spaces, I'm like, we're not optimizing these spaces. Like this space right here could be a double bed, bunk bed situation if you're in a family area and you can have more people in this space. More people means more money, right? Yeah. So just optimizing spaces to generate more revenue, I think is first and foremost the most important thing to do. Yeah. And then it's just like, once again, like where can we take certain spaces and make them fun? Right. Maybe it's like a space where we, people like having like Instagrammable things at short-term rentals. So that could be one thing. People like having certain space, like I said, you can transform into like a game space. So just looking at it and where are like the little pockets where you can create some unique experiences.
That's a huge takeaway that I'd never heard on the long-term side of the house is your vacation rentals, you creating social media walls or step and repeats, for lack of a better term, where people can literally go get their photos, their selfies, and tag the space, and that makes the property take off. Is that correct?
Yeah, and it can be such a small thing. We have at one property, we just have like this kind of really cool, it's almost like a forest wall, and there's like a little sort of like floating chair in front of it.
Awesome.
So just little things like that. It doesn't cost a lot of money to do that type of stuff, but it creates like a really cool moment when people walk into the Airbnb and they see that and they're like, oh, wow, like I get chills talking about it. So I like this stuff. But the creativity side of it is really fun for me. So owners that want to invest in that will usually get a really great return from it.
Honestly, that's a super cool part of the experience. Like you go to the place, you're expecting to stay, but you are spending a lot of time there. You're cooking or hanging out with family. And then, oh, by the way, like we took that family photo by the silver elephant that's 4 feet tall. Like how cool is that?
Yeah.
What about like looking at certain markets? When I hear short-term rental from the public, I hear people saying like, well, you need to find me a place in La Jolla or PB. Like, how do you address it when somebody comes to you and goes like, I need beach town? What are you saying to them?
My favorite people to talk to. Once again, I love working with investors that are like at the stage of trying to locate a vacation rental. Typically they're always like, I ask obviously what their budget is and things like that. And then most of the time they say, I want something by the beach. And I always try and educate them a little bit on this. Like, depending on what their budget is, buying by the beach usually is not the greatest investment for a short-term rental.
On a return basis.
On a return basis. Right. Like, if you're buying cash and you want to go stay at the property 3 months out of the year, by all means, buy by the beach. Because you're going to be staying there. If you're buying it as a business, this property is your business, right? You're going to make money on it. buying by the beach is typically going to get you a terrible return.
And why is it tough to make a great return at the beach? What makes it difficult?
The price of properties there is extremely high.
Crazy high.
Yeah, and the amount of bedrooms you're going to get is going to be really low. So, you can spend $1.5 million and get, I don't know, 3-bedroom house over in La Jolla or something, but that same $1.5 million could get you a 5,000 square foot house a little bit outside of downtown.
Right.
So that 5-bedroom, 6-bedroom house is going to generate double the income of what that 3-bedroom La Jolla house is going to generate. So you just look for those type of things. And every time I go through estimations with owners, when they tell me certain things, I'm like, here's what your beach property would do. Here's what this would do. They're like, okay, yeah, I need to start looking outside of the beach.
On.
Yeah, they're like, I need to start looking outside of the beach. And I'm like, yes, I get the mentality. You want guests to be able to walk to the ocean and things like that, and that's very attractive. But there's a lot of those rentals in those areas.
Right.
It's extremely competitive. So unless you're going to get a house that's super unique or do something really cool with it or have a pool, something like that, you really, you're not going to stand out very much.
Do you think it's all bedroom, bath driven? Like, hey, like you said, $1.5 million might get you a 3-bedroom where it could get you a 5-bedroom or a 4-bedroom, 5,000 square feet outside. Is that what the main competition for short-term rental is right now? Is it other short-term rentals, or is it the hotels? Like, what is the main competition that makes it having a bigger property or more beds attractive?
Yeah, just speaking very simply about it, I think more bedrooms obviously just generates more income.
Right.
So that's just an easy way of looking at it. Obviously, if you have more bedrooms too, you're not going to, a lot of travelers that come with families aren't going to book 5 hotel rooms, right?
Yeah, that's right.
They want to book a place where they can all stay together and have fun, or whether it's bachelor party, bachelorette party, whatever it may be, right? So bigger will generate more funds. So that's just kind of a simple way of looking at it. And then when you look at 1 and 2 bedrooms, you're then in a point where you're competing with hotels.
Yeah.
Right. And 55% of the supply in San Diego is 1 and 2 bedrooms.
Right.
So you just want to kind of, if you're going to have a 1 or 2 bedroom, create a unique experience at those 1 or 2 bedrooms. So at least makes you stand out a little bit above those competition,
When people ask you the question, what are my booking occupancy and rates? What do you tell them? If they ask for a rule of thumb, Braydon, I got a place. How much can I expect it to be rented? You told me before, if you were thinking expenses, you're going to say, Jayson, 40% is your expense ratio. You want to be super conservative, 50%. Booking, is it 50% of the time? Is it 80% of the time? What is a realistic scenario in general?
For occupancy percentage?
Correct.
So it's so different across the board. So we use 3 estimators that we pay for, which is why people come to us to ask us what it can do.
Right.
So AirDNA is one of them. We use B&B Calc, which is one of them, and then another one called Rabu. So we do kind of a combination of all 3 of those estimators to kind of, because they use comps and things like that. I don't give you a rough, probably 90% accurate estimation. We usually bring it down a little bit from there, because we don't want to overestimate.
I've seen some high estimates in there, right?
Yeah. And then from there, we take the 40% expense ratio to give them what their expected net income would be on that property. So,
occupancy time. Is it easy to determine from those type of applications, hey, at this price, you can expect an occupancy of Y amount? What is it that you're seeing?
Yeah, they'll tell you kind of this size property in this specific market based on the other comps that are in there. We'll do 65% occupancy at $800 a night or whatever it may be. So it'll kind of give you an idea. And then you can, we're adjusting pricing daily. Right? That's one of our big strategies is people think you just plug in a dynamic pricing tool, like Price Labs or Wheelhouse or something, and you just plug and play it and let it go. No, we're monitoring and changing it pretty daily.
Market specific driven, which is super important. And that's why being a local property manager is so huge, Braydon. Is there a rule of thumb on percentage? Hey, you want to find the sweet spot, the price being per night being X and the occupancy being 50% or 60%, or is that not, occupancy is less of an issue? It's
not as much of an issue, but there is a golden spot to be where you have the perfect occupancy and the perfect nightly rate. And typically the way you find that is just looking at your market. So when you use some of these dynamic pricing tools, you can look at 30, 60, 90-day windows and see what the market occupancy is in that area. And if you can get within that range, but have a higher average daily rate, you're kind of in the golden area.
That's the win.
So you got to find that balance, because we've taken over properties for people and they've been 90% occupied. And we're you're giving away the property right now. Like
Yeah.
the market's at 60, you're at 90%. Like, yeah, you have a lot of bookings, but you're losing a lot of money.
It's a great, it's a great insight right there. It's great. You're at 90%, but you're not making anywhere near the revenue you have. If you could drop down to 70%, you might be cleaning house with that.
And it wouldn't be as many people coming through the property, which is good for, you know, the property, like maintaining its value and things like that over time, you know?
And speak to that a little bit. It just as a biggest challenge in your industry, is maintenance of the property one of those challenges? Like, is that something that you're, I don't say constantly fighting with clients, but educating clients on, like, look, for success, we need to do this?
Yeah, I mean, maintenance is a big one. You are having cleaners go in there multiple times a week usually and like taking care of the property. So it does get maintained decently well, but you do get wear and tear. Sure. I think the hardest thing for us is just like tenants that stay at the property. Sometimes they're like, you know, they expect certain things to be a certain way. If there's like one small thing, it kind of degrades their whole experience. So we always are fixing things as fast as possible because, yeah, they hold the power of reviews, right? So you want to make sure that they have a good experience, they have good reviews, because then that leads to like getting more bookings and things like that. So yeah. So reviews are the hardest thing to keep in check because it has to do with not only the guest experience, but also the property itself. Right. You know, if the property is not being like well taken care of, things like that, you'll just naturally get bad reviews because of things breaking and whatnot. So we always play, I was telling you this, we always play offense instead of defense. So if we know something's happening, instead of waiting for the guest to come back to us and be like, we demand a refund, all that stuff, we will refund them a little bit of money or something. We'll give them like a $50 stipend or something. Just say, hey, because of this issue, we're going to give you $50 back. And then that typically like calms them down. And so that proactive approach is how we deal with it.
Handle the repair, be proactive with the communication and giving a little back to the guest. And that helps solve a lot of the issues. I want to wrap with one final question. Just kind of a fun little, like, if we were to roll out the door and get you in that time machine, Braydon, and get you back to the beginning of your experience, you know, not just founding Tumo, but just in vacation rental in general, what would you go back and tell young Braydon, hey, got to do this? What kind of advice would you give yourself?
Yeah, I mean, I would have started 5 years before I started, so that would have been one thing.
Get started earlier. Let's go.
But yeah, I mean, I think, to be honest, like, I don't know if I would have changed anything because the first year we had the business was really focused on building like our groundwork and laying that and making sure we had the right procedures in place and all that stuff. And then from there, we started kind of slowly growing. Typically, if I think about it, I'd probably go back and try and tell myself, hey, you could have been double the size you are now in terms of growth, but I think we grew at the right pace. I feel like if we grew any faster, we would have like had things crumbling in certain properties and things like that, and we would have had some mistakes, but we're growing at the right pace. So I'm like, yeah, I'm happy with what we're doing. And if anyone's listening, the last thing I want to say is if people don't know about this a lot of the time, but if you go and book on Airbnb, always see if there's a professional property manager and then go and search them on Google because you can get better direct booking rates than you would through like the Airbnbs or the VRBOs, things like that. So
that's phenomenal knowledge. And I'll just caveat that if it's not a professional manner, be careful. Okay. Let your spidey senses go up because if it's too good to be true, it might be.
True. That's another one. Yeah. Be careful.
Braydon Moreno, Tumo Stays. Thank you so much for coming on. All the information on short-term rental and vacation rentals here in San Diego. It was just a ton of great stuff. For everybody else, thank you for tuning in to the CashFlow podcast. Again, the podcast where we talk about turning properties into profits. We'll see you next week.